We're gonna start off with our usual. We're gonna do our dad jokes. What do you say when your favorite smoke shop in the mall gets bought out by J. Crew?
I don't know. What do you call it? A teacher that farts in a closet.
Welcome. Thanks for joining us for October. We're a few days behind, but it's because we actually got a little busy, got a little behind, and our schedules conflicted a little bit. But that's fine. We're back.
And the 15th fell on a weekend, didn't it?
It's a Sunday.
Yeah.
So yeah, here we go.
Billy works Sundays. I don't. That's a joke. It's a joke.
True-ish. I mean, I do Sundays, but yeah, no, it's fine. We're good. We're gonna start off with our usual. We're gonna do our dad jokes.
Okay.
You ready this time?
I'm ready.
I was prepared last time. So again, the dad joke is the listener is not supposed to laugh. That's the challenge.
Okay.
In doing so, do you want to go first, or you want me to go first?
You go first. Yeah, sure. Go ahead.
Okay. So, what do you say when your favorite smoke shop in the mall gets bought out by J. Crew?
I don't know.
Closed, but no cigar.
What do you call it? A teacher that farts in a closet.
I don't know.
A private tutor.
Private tutor. It's a good one. And we've mastered the not joking. Maybe our jokes aren't good enough. We've mastered.
Neither of us laugh.
Oh, we're just really good at it.
Yeah.
All right.
Can I say something though?
Yeah, go ahead.
I did not hear that joke anywhere.
Yeah, you made it up?
I created that joke. Yeah.
I've heard my joke. I've recycle. Recycle, reuse.
Yeah.
So, all right. We're getting the buyers. And they've had kind of a challenging time. We have slowed down a little bit. Let's just be upfront honest with everybody. It's been a little slower, and people are kind of just feeling out the market and kind of seeing where things are going. So I've noticed, have a little bit of decline, but that gives the buyers a little more push, a little more strength.
Yeah.
And we're seeing more things like the closing costs, and we're seeing repair requests. We're seeing things of that nature. Mm-hmm. But you're also seeing more people utilizing closing help programs.
Yeah,
correct? Okay.
At the height of the market, let's just say 2021, that entire year was crazy.
Yeah.
But there's been a lot of competition through pockets of 2022 and 23 as well, where a property that was listed and it's a good house, if there are a few offers, the down payment assistance programs would go at the bottom of the list because they'd rather have the buyer on the other side have a conventional loan with their own 10% down, whatever. Now, with this sort of slowdown or this fall into winter market, I think I have 4 out of my last 10 contracts we've utilized Maryland mortgage programs. It's not always down payment assistance. Sometimes it's the interest rate program that allows them to get a no point, really a competitive interest rate. And then also just for closing costs. If we have a situation recently, one of Tori's buyers where they were able to get all their closing costs paid by the seller. But if not, you pursue Maryland mortgage program and then allow the closing costs to be paid with the state funds. So we have a lot of flexibility with these different programs. When things are less competitive, you can now pursue those programs. You have to be scared of the seller saying, hey, we'd rather go with someone else because of the
a little bit less
financing you're pursuing. So where there's this slowdown in the market, there's some opportunity here, especially in that range of like a 260 to a 375 buyer.
Yeah.
Where those types of programs tend to be a little bit more prevalent.
So you're still seeing the usual, like a lot of conventionals, a lot of those programs, VAs, like there's no change really in the...
No. In fact, we had that appraiser panel event a couple weeks ago where we invited some of our realtor partners, and even hearing appraisers talk about, hey, this is the way you should be looking at contracts that come in with a VA pre-approval letter versus FHA versus conventional, and it all those types of things have really leveled out over the years. A decade ago, listing agents weren't touching VA contracts because they were afraid that they would nitpick. Yeah. So now it's not only the financing and the strength of it, really are similar across those programs, but even the collateral, meaning the house itself, they don't look at it at some sort of different scope. So it's all about money. Yeah. You're offering a seller, what's the price? Are you asking for money back?
Closing date, that kind of stuff.
The types of financing and things of that sort, they're not as important as they used to be.
Yep. So you said the word money. That brings me to the next topic, because I'm getting a lot of questions in regards to this as well. We're getting folks that have lots of equity that are homeowners. Mm-hmm. They're asking me about HELOCs. Yeah. Right. So HELOC, to dumb it down for everybody, the HELOC basically is you have equity in your home, what you paid for it, and what it's worth. There's a gap there. A lot, sometimes $100,000, $200,000, $300,000. or you can actually do a HELOC loan where it's a second lien on the house that actually you can pull money out and do projects and do things with. The question I get all the time is, what does that look like for rates, and how does that the process look?
Yeah. So, by the way, HELOC stands for Home Equity Line of Credit, and like you said, it is a second lien. And a lot of times, you can take out a home equity line and not even draw the maximum amount that's allowed. Some people consider it sort of like almost a credit card that's the collateralized on their house. I hate to think of it that way because it's dangerous. But again, if you take out $100,000 home equity line, you draw initially 50,000 of it. You're paying interest on that 50,000.
Yeah.
You don't always have to pay principal up front, but that can also be dangerous. It's
Yes.
convenient in the moment where you only have to pay the interest, but eventually it will freeze and amortize to the point where you have to pay principal and interest. There are other options, especially with someone who has substantial equity. And maybe, with this market and inflation and credit card rates and things of that sort, where they might have accrued a lot of debt, and they might be considering a HELOC to consolidate that.
It's a good idea.
Looking at a standard cash out refinance might be a better option, because if you look, let's say you have a 3% interest rate on your first mortgage, but you're planning on taking out a $150,000 home equity line, and that rate is, let's just say, 11%.
Because it's always higher than what you currently have.
Much higher. Well, rates in general are higher. Home equity lines are significantly higher. They always have been because of the layer of risk. It's the second loan. And those are sort of attached to the Federal Reserve rate, whereas mortgage rates aren't necessarily. So if you blend a 3% rate on, let's just say your mortgage is you owe $300,000, a 3% rate, and then you're taking out a $150,000 home equity line at 11% interest.
14.
You go with that blended rate, and you look at what the payment would be, and you add those two together. Sometimes it's better to do a cash out at 7 3/4 on the entire amount.
Just take the money out and
just do a cash out refinance and have just one loan. You know what the payment's going to be. You don't have to worry about putting extra towards principal to pay down that HELOC quicker. It depends on the scenario. You just run the numbers. Which one is going to yield the lowest combined payment?
So really, what we did if you're thinking of HELOC as an option, first is to sit down with him and look at the numbers and see what it looks like for you, and the second to sit down with my team and to see whatever that project, whatever that is that you're going to do, is worth it in regards to the value of your house. If you're like, hey, I want to put in a big screen room, or if I'm going to do this and doing this, we got to sit down and we'll look at it and say, all right, cool, is it really worth it for you? Or sometimes people just want to do it because they've always wanted to do it, which is an emotional decision.
Sure,
perfectly fine, do it, but if you want to make sure that it really lines up with your financial goals, let us know. We can both tag team and help you out.
It's all you ask the right questions when you sit down with clients. Is okay, how long are you going to be in this property? Is this project a forever home type of project where I've always wanted this, I know I'm going to be in this house for 20 to 25 years, then the dollar for dollar return isn't quite as important to somebody like that. But if they're going to do this project because it's out of necessity to in the future maybe sell the house, then you really have to dig into the return on that investment and whether or not in that time frame they will be able to recoup what they expect. Again, we had that appraiser panel. Dollar for dollar returns are rare. Sometimes it happens in a bathroom or a kitchen, but a lot of these big projects, it has to do with the marketability of the property. You know, if you're putting a $150,000 in-ground pool with a ton of hardscape and waterfalls and stuff on a house that in that area, no other house has that same feature.
It's tough.
It's difficult. Again, sitting down with Billy and being realistic with what your intentions are, and if your question is what's the return on my investment, you have to be very realistic with how long you're going to be in that property.
Yep. And that's really what we have this week. We're, like I said, we're here to free educate you. I always find that the people are looking or thinking about buying this time of year, October, November, December, are planners.
Yeah.
It's traditionally the way, and we said it. If you go back and look at our video probably from last year, I probably said the same exact thing. It doesn't change. The folks that are looking and thinking about it, they're planners. And so they want the free education, which we're happy to help you with. We can sit down and go over the process. I have a buyer video series that walks you through the whole thing. Tim is in it.
Yeah.
So we're educating. This time of year is always educating, getting ready for Thanksgiving and educating.
I mean, the educational piece, if that's more of a preparation, if you're looking to buy next year in the next 12 months, that's a big thing. And of course, we'd love to have a conversation with you. But again, if you're a buyer that decides to buy in October, November, December, January, you are Warren Buffett. Warren Buffett is saying when everybody else does one thing, you do the other
opposite,
thing. So when things slow down and buyers get out of the market and you're getting into the market, I think there's a huge benefit to that.
It's just a matter of being prepared, really. That's really what it comes down to. Once we sit down and educate you and show you how to do it, most people start dabbling. They start getting listings. They start seeing what's out there. And they just look at the houses differently after the education than they did before. Before, it's like this big unobtainable thing. Once we sit down and go over the process and the numbers, they look at it and say, all right, cool, it's going to be about this much for this. It's going to be that. They just look at it differently. And so it really helps them once they have that education. If they want to wait till March, February, whatever, that's fine. But something might come along too in December where they get a real home run and really get a good deal out of it too. So it doesn't hurt just to sit down and have the chat and go back and watch the rest of our videos and explaining like the process. And if you watch back the probably the May-ish one where we talked about everybody's getting back out again, it's going to be that way again this May, this April, like just the way it is. That's just the way the market is. So
I think the spring market might have been a little bit more delayed this year than it has in previous years, but there is a real, I mean, there's data behind it, but it makes sense why somebody would wait till the spring market to list their house. Because maybe they want to allow for the weather to warm up to do landscaping or whatever. And then of course you have that bigger flux in the summertime because all of a sudden now schools are out and you can make the move and get into the new house before the new school year starts. So there's different cycles throughout the market. Again, if you are somebody that has always looked to want to buy, and you have a conversation now, then if a house pops up, like you said, in December, you're ready, or it pops up in March or May or June. Either way, the conversation's already been had and you're prepared.
Once they get, my final question, once they get, let's say they would want to get pre-approved, if they kind of, sort of, let's say they get pre-approved now, but they don't buy until April, how often do you re-up that pre-approval?
Yeah, it's kind of a fluid thing. We try to update it as the credit report expires. If you're a very active buyer and you're making offers and you're out there, you're looking, then I'll want to get your, every time you get a new pay stub or a bank statement, send it to me. But if you're somebody that just sort of, we pre-qualified for a long-term planning purchase, then, if a credit report expires after 4 months, which is how long they're good for, then maybe we'll want to check in to see, if things change credit-wise. It's a very fluid thing. How active are you?
Yeah.
If you're somebody that's just kind of on the sidelines, well, there's no need in me getting an updated pay stub, especially if you're at the same job and it's still salary and
all stuff there.
It's very conversational. Call up, hey, what's going on? Has anything changed? Things pretty similar as before. Okay. No need to get anything updated.
Another thing I always tell folks is if they're getting a raise, let's continue working with the numbers, the pre-raise numbers, because after the raise, you'll be even more comfortable in a house.
Yeah.
If you really just can't find anything in that price range, then we'll go back and revisit what you get qualified for. But let's just live off of the pre-raise era, and that way you can take a vacation or two. Or Christmas
give
a little nicer this
a
year.
raise in your 401k or what have you. If you get a 2% raise and you up your 401k 2%, it's a net benefit to you.
Yeah, all that fun stuff. So, as usual, Mr. Tim, we appreciate you. Last thing. Well, we have the event coming up this weekend, and we have another November, and we'll have our December Christmas party. Ohio State, Penn State score. What do you got? Give me a score.
I'm a little bit pessimistic this year because Ohio State has sputtered a few times. I'm going to say this is going to be a 28-24 Penn State win.
Oh, no, that's bold. I don't know if it's going to be like that. We'll see. It's in Ohio State, right?
Yeah.
It's at the shoe. It's the shoe, so that's a little bit different. It's going to be tougher.
It's going to be
You heard it
dog
here.
fight.
You heard it here. So, place your bets. Put your money down now.
I think is Penn State opened up as a 4.5 point favorite?
No, they're underdog.
Really?
The ESPN has been underdog.
Oh, interesting. Okay. I don't gamble enough, obviously.
We gamble outside of sports. Gamble in life. All right, folks. We'll see you again next month where we're getting ready for my favorite holiday of all time, Turkey Day. It's the greatest.
I'm a Christmas guy. Thanksgiving's second for me, but they're both. I mean, it's 1A, 1B. Let's be honest. Yeah. Wait a second. You're a St. Patrick's Day guy.
I like St. Patrick's, but Thanksgiving you do nothing. Like they cook all the food and you sit there and watch football and relax.
He's not involved. He doesn't cook.
My wife pushes me out of the way. She and her family are the big cooks, so they're like, yeah, you can help peel a potato, then get out of the way. So I play my role. I do the ham actually.
Okay.
So they do turkey, I do ham.
we have a lot going on this month with pumpkin patch visits. And, we're going up to Gaber Farm in Mount Airy on Sunday. The following weekend, we're going to Hershey Park for their
When are you going?
Spooky Fest, whatever. It's the Saturday before.
28th.
Yeah.
I'll be there.
Oh, you want
I'll be in Hershey.
to hit up the Big Bear together?
Yeah, so we'll be in Hershey together.
You heard it here first, guys. Billy and Tim, Hershey Park, the 28th. See you there.
That's pretty funny. All right, folks. We'll see you again next month. And Tim, thanks for your time.
Anytime.